This Thursday, 27 February 2020 hearing officer meeting is called to order. Good morning, I am County Staff Member Gina Natoli. I will be the hearing officer on all agenda items this morning. Let me go through a few administrative items first. Please turn off or silence all electronic communication devices. An agenda of today's proceedings is available in the back of the room. It's possible that there were materials submitted after the release of documents for today's hearings. Any additional materials are available in the back of the room. There are established time limits for testimony on hearing officer agenda items. Petitioners have up to 10 minutes and up to 5 minutes for a rebuttal period. Respondents have up to 10 minutes. All others are allowed 2 minutes each, and there is no ceding of time. Anyone wishing to testify today on any agenda item, and that includes the public comment period, must fill out a speaker card and submit it to staff in the back of the room. There is an audio and video recording being made of today's proceedings and will be available from DCBA staff within 10 working days. The general procedure for today's agenda items is as follows. First, staff will make a brief presentation. Then the petitioner will speak. I will then ask all respondents to speak. Any members of the public will speak last, and if necessary, I will then hear rebuttals by the petitioner. Final decisions made by hearing officers on landlord petitions which do not assess an administrative penalty, and final decisions on all tenant petitions are final and are not subject to further appeal at the county. If you intend to testify today on any agenda item, please stand at this time to be sworn in. That would be now, Mr. Hardy. Thank you. Yes, please raise your right hand. Do you solemnly swear to tell the truth, the whole truth, and nothing but the truth? Thank you very much, sir. Please be seated. I will be taking agenda items out of order. I will take item 4 first, since the petitioner is here, and then I will take items 2 and 3. Moving on to item 4. This is case RSQ 1911184. The case is a request for a fair and reasonable return petition. The hearing is open. Ms. Lewis, please proceed.
Thank you. As you stated, it's the Interim Rent Stabilization Ordinance petition for relief from moratorium, RSQ 1911184. The petitioner is Alex Hardy, who is the landlord, and the respondents are the subject property tenants. The petition date is September 17, 2019. The petitioner is requesting, has completed a petition for relief from moratorium, requesting to increase rental income in excess of the allowable limit as established by the Interim Rent Stabilization Ordinance 2018-0045. The subject property addresses are 1114 West 102nd Street, Los Angeles, California, 90044. 1116 West 102nd Street, Los Angeles, California, 90044. And 1118 West 102nd Street, Los Angeles, California, 90044. The property is located in the unincorporated area of West Athens and is a residential dwelling on a property with 2 or more units and was built in 1953. The petitioner returned the proof of service to DCBA on September 18, 2019, declaring that copies of the petitions were sent to the respondents. That date is incorrect, but it was within our jurisdiction. Then the notice of hearing was mailed out to the petitioner, the original one, on January 15, 2020. Okay. So now we'll discuss the key issues of the case. The 3 rental units on the property are currently rented out for a reported total of $3,852 monthly. The petitioner is requesting an increase in total monthly rent to $4,559, which constitutes an 18.35% increase. And at this time, the petitioner has not requested the allowable 3% rent increase. So the proposed monthly increase of $707 would increase the total rent again from $38.52 to $45.59 and by 18.35%. According to the ordinance, the petitioner may already be allowed to increase the rental income by 3%. And then, as I've already stated, that has not taken place yet. So the petitioner reports the following operating expenses. Those are property taxes, property insurance, fire insurance, maintenance and repairs, water, and pest control. DCBA received the following expense-related documentation from the petitioner. We received utility bills, which was a payment summary, canceled checks, property tax statements, insurance statements, and maintenance receipts, as well as invoices. So the interim rent stabilization ordinance and implementing rules and regulations define a fair return as ensuring a landlord may maintain the value of the net operating income earned from the property prior to the regulation of rents under the interim rent stabilization ordinance and continue those earnings during the pendency of the ordinance. Net operating income is defined as gross income less operating expenses. Maintaining the value of the net operating income is achieved by ensuring the net operating income increases no less than any increase in the consumer price index for the Los Angeles area, as reported by the U.S. Department of Labor, Bureau of Labor Statistics. To maintain the net operating income, the county compares a landlord's net operating income prior to the ordinance and at the time that the landlord petitions to the county for a rent increase. And again, we do that to ensure that the net operating income received when the petition is submitted has increased in value equal to the change of the CPI. So this evaluation is summarized here in this figure above, and we'll discuss that as well. Okay, so as you can see in the base year for September 2017 through August 2018, the petitioner reports $42,252 in income and $6,610.82 in operating expenses, which leads us to a net operating income of $35,641.18. For the same time period, DCBA was able to substantiate that there was a income of $42,252 and operating expenses that came up to $6,430.82, which takes us to a net operating income of $35,821.18. In the petition year, which is September 2018 through August 2019, which is based on when the petitioner filed the petition, the 12 months prior to that, the petitioner reports a gross income of $44,458. DCBA substantiates the same for the income. For the operating expenses, the petitioner reports $14,750.69, showing that he has a net operating income of $29,707.31. DCBA was able to substantiate $8,156.69 in operating expenses, taking us to a net operating income of $36,301.31. As previously stated, we'd like to ensure that the petitioner maintains the value of the net operating income in accordance with CPI. So we can see that CPI was 2.68.032 in the base year, and it went up to 274.114 in the petition year. So that takes us to a change of 2.27%. So what we did was adjusted the net operating income in the base year to determine at the very least how much the petitioner would need to receive in the petition year to maintain a fair return. and maintain the value of the net operating income. So what we see when we adjusted that is that in the petition year, the petitioner should have earned at least $36,450.23 based on what the petitioner provided. From what DCBA was able to substantiate for the net operating income in the petition year, we see that the petitioner should have earned at least $36,634.32. As you can see, there's a substantial difference between what the petitioner reported and what DCBA substantiated. Based on the petitioner's reported income and expenses, we see that he would be operating at a loss of $6,742.92. But based on what DCBA was able to substantiate, we see that he is operating at a loss of $330.01 in the petition year. Okay. It appears that DCBA calculated the decrease in net operating income between the base year and petition year is due to an increase in operating expenses, although there was an increase in income between the 2 years. And this is based on the evidence provided that includes utility bills, canceled checks, property tax, insurance statements, maintenance receipts, and invoices. To go over the difference between what DCBA was able to substantiate between the net operating income that was reported by the petitioner and what we were able to actually calculate, I'll go over what items were not included. So DCBA was unable to substantiate the following expenses reported by the petitioner. The first being the P.O. Box rental. The petitioner provided a paid invoice for a P.O. Box rental in the amount of $90 in the base year and $154 in the petition year. DCBA did not substantiate the expense as the petitioner reported the P.O. boxes for general use and not dedicated to the property. The bath heater repair that was completed by the petitioner. The petitioner reports repairing the bath heater for the unit located at 1116 West 102nd Street, Los Angeles, California, 90044 in the base year. However, DCBA did not substantiate the expense as the petitioner reported billing the respondents for the expense in the amount of $190. There was a lock change that was completed at the property for the same unit, and DCBA did not substantiate the expense as the petitioner reported billing the respondents for the expense in the amount of $90. Paralegal money order. The petitioner provided a money order in the amount of $50 and stated that it was to serve one of the respondents in the petition year. However, DCBA did not substantiate the expense as the receipt showed no relationship to the property, and DCBA received no invoice to demonstrate this. Toilet stoppage. The petitioner reported repairing a toilet stoppage for the unit at 1118 West 102nd Street, Los Angeles, California, 90044 in the petition year. But DCBA did not substantiate the expense as the petitioner reports billing the respondent for the expense in the amount of $200. Lastly is a roof repair that was completed at the property with Sun Pacific Roofing. The petitioner provided DCBA with an invoice and council checks related to repairing the garage roof at the property in the amount of $6,000. However, DCBA did not substantiate the repairs as both the petitioner and the respondents reported that the repairs were related to deferred maintenance at the property and have been delayed accordingly. I want to take some time to address the questions that we received from you regarding this. So the first thing is, I'm going to go out of order with your questions, just related to the roof repair being a pass-through cost. In terms of a capital pass-through, yes, it would be classified as such and amortized depending on the work and the expense, the evidence provided by the landlord. So it would be categorized as a temporary rent increase. However, the reason why DCBA is not substantiating the expense, like you said, deferred or not, because had the petitioner done the work before, had the petitioner not deferred the work, then there's potential that the work would have costed much less. So rather than it being a $6,000 expense due to the petitioner putting it off, it could have been much substantially less, and then at that point would have been able to be passed through to both the tenant, between both the tenants and the landlord. But because the petitioner put off actually completing the work for a substantial amount of years, and I don't have the amount of years that he put off the work in front of me right now, but because he put the work off, it did lead to the expenses being much more than they would have. And it's not the tenant's responsibilities to actually go and take on that additional cost as a result of the deferred maintenance. So the CPI for the base year, like I said, is 2.68.032, and the CPI for the petition year was 2.74.114, and that was a 2.27% increase from the base year. So as I stated before, in order for the petitioner to have a fair return, we want to ensure that they're maintaining what that CPI inflated monthly net operating income should be, which would be at least $36,634.32. We calculated it at $36,301.31, which does not exceed the CPI inflated net operating income. So in these circumstances, the petitioner should be entitled to an increase in rent in order to maintain the value earned in the base year. However, the 3 units at the property are eligible to have rent increased by the allowable limit, which is currently 3%. So if the petitioner were to have increased rent by 3%, this would have resulted in a net operating income of $37,635.05. Accordingly, this exceeds the CPI inflated net operating income of $36,634.32 and does not entitle the petitioner to an increase beyond the allowable limit. So at this time, staff is recommending denial of the interim rent stabilization ordinance petition for relief from moratorium, case number RSQ19-11184. Thank you.
Thank you. I thank you for addressing the questions from my memo. I don't have any other questions for you at this time. Before I call Mr. Hardy has submitted a lengthy lengthy written testimony, and what I'd like to do is take some time right now to read that. So it's going to take a few minutes. Folks, just bear with me while I read through the testimony. All right, thank you, everybody, for your patience. At this time, I'd like to call Mr. Hardy. If you'd like to come on down. Did you want to make a statement today, Mr. Hardy? Thank you. I actually do have a question for you, sir. Please, if you could just sit in any of the chairs, yes, there. And I'm just going to ask that after I ask the question, that you state your name for the record before you reply.
Yeah, Alex Hardy.
All right, I haven't asked a question yet, but that's okay. My question for you is, based on the testimony here, you mentioned a tree removal expense. Was that the expense from Harold R. Brzee Company?
That's correct.
And they removed the tree?
Yes, ma'am.
Right. Ms. Lewis, was the tree removal expense included?
Yes.
All right, so you included that in your calculations as a substantiated expense?
Correct.
Okay, very good. All right, so the tree was already included. I don't have any other questions for you, Mr. Hardy. Thank you very much. You can stay there or back to your seat, whatever you're more comfortable doing. That's completely up to you. Ms. Lewis, let's talk about the roof repair.
Okay.
I am not inclined to leave the roof repair cost out of the calculations. While I understand that there is a desire to ensure that landlords do repairs in a timely manner, it seems to me that there reaches a point where, particularly if you are, I'm sure like most of our landlords in LA County are, a mom and pop landlord and not a corporation, you're saving up the money to do the repair, and then it reaches a point where it's taking a little while, but where is the tipping point between you need to do it now and you're taking too long and it's deferred maintenance? So up until that point, it would be considered an incentive by the county for a landlord to do the repairs as soon as possible, because after that point, then we're saying you're taking too long. Now it's deferred maintenance, and it possibly would have been cheaper. However, I don't know that we can say what that point is, or where that point is, or when that point is. And once it passes that point, if I'm a landlord and I know I'm not going to be able to pass that cost through because there's a county department that thinks it took me too long to do it, then I just won't do it. So I think after that point, it becomes a disincentive for particularly a capital improvement like this to be undertaken. So I believe that regardless of the reason for the delay in performing the maintenance, that it should be included as a cost that could be passed through to the tenants. At some point, it has to be completed so that the tenants and the landlord can both benefit from the repair being undertaken. So we need to include the roof repair cost as a pass-through, not as a rental increase, but as a capital improvement pass-through cost. And so that's what I'm going to direct staff to do today. County Council, if you have anything to add, please intervene and let me know. What I'd like to do today is ask for direct that there be a continuance, and however long staff needs, whether that's until the March 12th hearing or perhaps March 26th, to revise the recommendation and some conditions with passing through the roof repair cost, because it is substantiated. We have an accepted contract by Mr. Hardy, by the petitioner, with the vendor, and we have his canceled checks showing that he paid $6,000 to repair the roof. So let's calculate that in to the three tenants with a pass-through based on whatever the amortization period is for the roof. Now, the rental increase, let me address the rental increase. Unfortunately, Mr. Hardy, our ordinance passed by the Board of Supervisors does not refer to the U.S. government housing and urban development fair market rates. The ordinance is very strict. It's 3%. That's the annual increase that you're allowed. So while HUD may say that a 1 or 2 bedroom apartment could be rented for more than you would be able to charge under the ordinance, we're the county, and so we have to implement the ordinance, which is 3%. If you implement that 3% every year, if you implement the 3% on the tenants you have now, under the calculations, and it's just math, based on the expenses that you can validate, that's what you're allowed to do. If those basic expenses mean you're not getting what you got in the petition in the base year, that's when you could probably petition to get more as an increase. And these capital improvement costs, since they're considered temporary, the tenants are going to pay you back for a certain amount of what you spent over a specific period of time. That's very different than your usual maintenance. So when staff comes back, I'm not going to approve the rental increases that you asked for, but I intend to approve a pass-through cost to the tenants for the roof repair. And that's what I'm going to be directing staff to do. So given that, Ms. Lewis, how long do you think you need to revise this? Can we go to March 26th? Would that be more convenient for you?
I can have it done by March 12th.
March 12th. If you'd like to do March 12th, that's fine with me. So, Mr. Hardy, do you understand what I've directed staff to do and why I've directed them to do it?
Yeah, yes, ma'am, I do understand, but there's one issue I don't quite understand.
Sure.
That is, I thought I read somewhere in the ordinance that if the rents was substantially below the HUD rent recommendations, then the hearing officer had the hearing officer could, at her discretion, grant an increase over and above the 3%.
So, Ms. Lewis, would a Vega adjustment be appropriate in this case? And that's what they call it. They call it a Vega adjustment because of the person who...
No, I'm talking about something separate from the tree and the roof.
I understand, but it's based on something that's called a Vega adjustment.
Yes, so I'd like to address that. So in our guidelines, the hearing officer guidelines, it does state that we can evaluate rents in accordance with the HUD standards, the fair market rents. However, it is due to the rents being unreasonably low and the landlord having demonstrated that the rents in the base year were low for some particular reason. In this instance, he is not eligible for a Vega adjustment because he hasn't demonstrated that his rents were unreasonably low in the base year, considering the track record of the rents in the years prior to the ordinance going into effect. So the rents already were at the rate that he currently has them at, or I think he might have already given them a 3% increase. However, the tenants' rents were not increased because the landlord elected not to, again, there was no reason that they were unreasonably low. So your evaluation of whether or not a Vega adjustment would be appropriate here is based on not a HUD idea of what a 1 or 2 bedroom apartment could go for, but what the landlord has already been charging, or what's... There was no unusual circumstance that kept those rents below those HUD standards. Oh, I see. So if there would have been an unusual circumstance, we would have brought him up to that amount and applied the Vega adjustment. But there was no unusual circumstance. His track record shows that the rents were already what they were at. So it's based on, unfortunately, Mr. Hardy being a nice guy and not
increasing the rents, as opposed to he was renting to his mother or some other reason that the rent for those units was kept very low.
Correct. Mhm.
Okay. Does that explain, it doesn't mean that you agree with it, Mr. Hardy, but does that explain what DCBA has done in these calculations?
I didn't quite understand what she said, but I get the gist of it, yeah.
You know, if I'm renting,
So what was that? Maybe you can explain it to me better.
yes. If my mother, I understand. If my mother needs a place to live, or my sister gets kicked out of her house, or my daughter loses her job and can't afford where she's living and they need a place to live, I'm not going to charge them what I charge somebody else to live in this unit. I may only charge them $10 or $20 a month, but that's because I'm being nice and I'm related to them. It's not based on, these are tenants and I just haven't raised the rent because I just haven't raised the rent. So there's a difference between, say, for instance, renting to family or what you would charge yourself for the rent, and not increasing rent for other tenants. So that's why it's considered not to be a valid reason that the rents are considered artificially low. Because you were a nice guy and did not raise rents on your tenants is not considered a valid reason for keeping rents artificially low that would give me the opportunity at this point to say, right, it was Section 8 housing and he was getting a voucher, and so that's why his rent was low, because he was getting a Section 8 voucher. Well, that would be a reason that your rent was artificially low. If the Section 8 person moves out and a new person moves in, you should be able to go up to market rates as opposed to the Section 8 rate plus the 3%. So that would be considered a valid reason where they were considered artificially low. You being a nice guy is not making it considered artificially low.
I understand, but they are Section 8 tenants, all three.
Then perhaps that's something that you need to discuss with DCBA staff. Now, the ins and outs of this, the staff are going to be able to help you with.
I understand.
So that might be another reason. Maybe, I don't know if continuing to March 12th then will be enough time. Tell you what, let's continue this to March 12th. And if you end up needing more time because something else is rolling into this, like artificially low rents, then at March 12th, staff would just ask for a continuance for more time to evaluate the paperwork to see if something else needs to come into their recommendation. So that's what we're going to do for now.
Okay.
All right. Okay, so then with that, unless anybody has anything else at this time, what I'd like to say is to provide sufficient time for staff to evaluate new information. Item 4, case RSQ 1911184 is continued to 12 March 2020. Yes,
Well,
Mr.
I have to
Hardy.
notify the tenants of this new date.
Yes, you do.
You always have to let people know because this is considered a public hearing, so just let them know it's being continued to March 12th.
With the regular posting, or can I serve them some other way?
The same as usual, the notice of hearing. We'll provide you with a copy of a notice of hearing for the 12th.
The same way?
Yes.
Yeah.
All right. Thank you, Mr. Hardy. So then this item is continued to 12 March 2020, and we are finished with this item for today. Thank you. I see we've had someone else come in. Do I need no one speaking on this item? All right, then. Can we move on to item 2 then, Ms. Lewis?
Yes.
Please go ahead.
Okay. The item is a petition for noncompliance to request a reduction in rent in accordance with the interim rent stabilization ordinance 2018-0045. The petition for noncompliance was originally heard on December 5th, 2019, and during that time, the hearing was continued to a date certain of January 30th, 2020, and continued for a second time at the request of DCBA to February 27th, 2020. On February 21st, 2020, the petition for noncompliance was withdrawn by the petitioner, Juan Santos. DCBA is requesting that the hearing officer close the public hearing for this item based on the petitioner's withdrawal.
Okay, my agenda shows that this is item 3. Item 2 was Moises Torres. Item 3, Juan Santos. So we are on case number RSQ 1913263, petitioner Juan Santos. I
apologize about that.
That's quite all right. I just want to clarify that for the record. The hearing on this item is open. I have no speaker cards, so we have no speakers for this item. I am closing the public hearing, and as the petition was withdrawn, there is no case to evaluate. As the petition has been withdrawn and the overpayment returned, the petition is moot. I deny the petition for noncompliance, case RSQ 1913263. My findings will be issued within 20 calendar days, and this item is concluded. Right, now we're moving on to case RSQ 1914706, petitioner Moises Torres. Please proceed.
Okay. The item is a petition for noncompliance to request a rent reduction in accordance with the allowable limit as established by the Interim Rent Stabilization Ordinance number 2018-0045. The petitioner resides at the property located at 658 Hefner Avenue, Los Angeles, California, 90022. DCBA is requesting additional time for review and analysis of the supporting documentation provided by the petitioner and the respondents. The Department of Consumer and Business Affairs is requesting a continuance of the case to March 12, 2020.
Thank you. This hearing is open, and I have no speaker cards for the item. Therefore, to provide sufficient time for submittal and review of documents, item 2, case RSQ 1914706 is continued to 12 March 2020. I also have no speaker cards for public comment period. Therefore, DCBA hearing officer is adjourned to 10 a.m. Thursday, March 12th, 2020. Thank you, everyone.